Hi everyone. As you know, April next year sees the introduction of joints and several liability when umbrella companies are engaged. And whilst these changes are aimed at addressing the obvious cases of non-compliance, tax avoidance schemes such as mini umbrella companies, the risks extend beyond the obvious cases of non-compliance through potentially to any situation where the umbrella company hasn't accounted appropriately for the tax, whether that's deliberate or otherwise. And so one area to be mindful of is how umbrella companies treat expenses. Now, even though an expense might be funded by the end hirer on top of the contract rate ultimately being paid through to the umbrella company, HMRC will still expect the umbrella to have undertaken due diligence on that expenses payment. Firstly, to ensure that the worker incurred an expense, but also and importantly, to check that the expense could be paid tax-free based on the circumstances. And this isn't always clear-cut. To give an example, you might have an end hirer that's agreed to fund the cost of the worker's travel to and from head office because they live a fair distance away. But if that office is the only office that worker will ever attend for the duration of that contract, however infrequent, then it's likely HMRC will deem that their ordinary workplace for the purposes of claiming expenses under the temporary workplace rules. And as such, any expense payments for travel or otherwise should be taxed. Now, you might hold the view that the worker is remote, that they ordinarily work from home, and so any onward travel to an office, perhaps on the rare occasion they need to attend an office, could be paid tax-free because that's a temporary workplace. However, HMRC is often reluctant to accept a worker's home as their workplace. What they'll look for very often, not always, but very often, is whether or not there's an objective requirement for the worker to undertake their duties from that location. If it's just out of convenience, then HMRC's view will very likely be that their home isn't a workplace and any onward travel is their ordinary commute, again, however infrequent they need to undertake that travel. And again, expenses should be taxed. It's worth remembering that any payment an umbrella company makes to an employee is payment from an employer to an employee, and HMRC's starting position will always be that it should be taxed unless the employer can evidence otherwise. Now, mistakes like this can be costly when you extend that across multiple workers and multiple tax years, and especially when you consider that any liability, if there is one, could be half, if not more, of the overall value of expenses being paid. And so the point here is, when you undertake due diligence on your umbrella companies, make sure you look for not just the obvious cases of non-compliance, but any area where a tax liability might arise. And we'll be talking about this and other similar examples in the coming weeks. In the meantime, if you have any questions and you want to talk to us, feel free to reach out. Hi everyone. As you know, April next year sees